Today's ETF battle features a growth versus growth contest between ARKK and GTEK from Goldman Sachs. This is another viewer requested matchup and it's going to be good, so stick around. Welcome to ETF Battles. I'm DeLegge. If you're here for the first time, hit that subscribe button as well as that like button. And if you've been enjoying our content, post a comment. Let us know what you think about the show. Also, if there's a certain ETF contest that you'd like to see, give us those ticker symbols. We could do double headers, triple headers. We can even do quadruple headers. So again, hit us up in the comment section below. Also, you can find us on Twitter at ETF Guide. Now, this battle for today was requested by a viewer named Fred multiple times. That's how bad he wanted to see it. And I actually lost track of how many times Fred pinged our comment section with these two tickers. All I can say is that it was more times than Lionel Richie's 3 times a lady. Anyway, Fred wins an ETF Battles shirt or a coffee mug, his choice. That's because his ETF battle was selected and it's going to be featured for today's program. So congratulations, Fred. Please follow the instructions in the comment section below to claim your prize. Now, today's contest is between ARKK and GTEK. Now, GTEK is new kid on the block. It was just launched in September. Why in the wide world of sports are we analyzing ETFs with no performance history? I have no idea, but let's experiment and see what happens. And if everything goes well, who knows? Maybe we can blow up the lab. Todd Rosenbluth at CFRA Research and Mike Akins at ETF Action will be judging today's contest. Guys, welcome to the program. Great to see you again.
Great to be here, Ron.
Good to be with you all.
Be sure to check out their work. I think you'll agree that it's pretty good. So the 4 battle categories for today's contest are cost, exposure strategy, performance, and then our mystery battle category. That's where you, our judges, can pick that single factor or multiple factors to make your final determination. You can also give us a wild card pick if you don't like any of the ETFs on today's headline contest. And at the end of the show, we will declare an overall battle winner. So let's get started with our first category, which is cost. Mike, kick us off.
Well, you know, when you're talking about the thematic space, really cost is one of the last things you're really going to look at, because the exposure of these strategies is what you're buying. You're buying, if it's active, you're buying the portfolio manager's skill sets. You're buying the companies they're owning, and the divergence of returns for this category are massive, right? So year to date, we classify just under 20 ETFs as multi-theme ETFs, we look at both these ETFs in that regard, and there's over a 30% difference between top and bottom performer year to date. So 75 basis points is what they both charge. So it's a toss-up. It really has no decision in this battle from my perspective.
Thank you very much, Mike. I got you down for split decision on cost. Next up is Todd. Todd, give us your take.
So I'm going to jump in now with my wild card. I've never done a wild card before with the ETF battle. In fact, I've thrown a penalty flag when someone did it on me, but I'm going to pull one out because there's a better ETF and you'll see across the category. So let me go start on cost. That ETF is KOMP. It's COMP is the ETF. It's a State Street product. It's index based. It provides exposure to various themes as well, but it's using artificial intelligence. It's a Kensho product, again, from State Street. KOMP is the ticker here, and it costs 20 basis points. So we'll get into, I agree with what Mike said, what's inside and how you get exposure is more important with a thematic-oriented ETF, but you can save 55 basis points with this ETF, the State Street product, KOMP. So that would be my winner. If I can throw a I don't know what the rules with wild card ETFs, if you can have a winner in each category, but that would be my winner in that category. But I agree with Mike, 75 basis points for the 2 listed products we talked about initially.
Very good. Thank you, Todd. I got you down for comp. And this is a historic moment. Like Todd said, this is the first time he's ever used a wild card. So it's good to see that he's getting in on the fun. Some of our other judges have been a lot more liberal with their wild cards. Not Todd. Todd is very stingy and distinguished. He's got a distinguished taste when it comes to ETFs. So when he gives us a wild card, it's truly meaningful. So thank you very much, Todd. So next up is the exposure strategy category. And Todd, you're still up. So give us your analysis.
So let me just expand a bit on why we I guess, made historic effort to include a wild card. We just think that while we believe you don't need a long record when choosing an ETF, if it's actively managed, we require more than a month or so of history. For us at CFRA, it's typically 3 months before we can do thorough analysis on an ETF to understand its exposure, understand where it is. So let me just, Mike's going to probably tell you more about the 2 ETFs that were named and listed. Let me tell you about comp. It's index-based. It's using artificial intelligence. It's going across many of these themes that will be tied overall in terms of long-term thematic opportunities. It's using financial reporting statements to be able to sort through that using AI, but it's index-based. So the changes happen on a much more gradual nature. These 2 other ETFs are actively managed. What I would note about the GTEK product is that it focuses on durable growth. So that's a notable difference between what ARK is doing, where ARK is focusing on the longer term growth potential and is willing to take on more risk at the underlying security level of less proven companies. With the GTEK product, we expect we're going to see more stable growing companies that have longer term potential. But my winner is comp again, because we just think an index-based approach using artificial intelligence provides good exposure to this overall theme.
Thank you, Todd. Next up is Mike for exposure strategy. How do you see it?
Yeah, so I think Todd makes some great points with respect to comp. I would argue that comp from a thematic perspective and innovation, when we think about adding themes to a portfolio, we're thinking about adding differentiated alpha to a portfolio, that opportunity base. Comp is extremely diversified. It's got almost as many names in it as the S&P 500. So you're going to dilute out a lot of that alpha potential. With it, you're also going to dilute out a lot of the risk that you would get with some of the others. So it's a give and take in the thematic space. But sticking to GTEK and ARK, I think they're both actively managed. I think what's great about talking exposure strategy with these 2 things is innovation is in the eye of the beholder, right? If you look at GTEK and you look at ARK, they both talk about long-term thematic innovation, companies that are leading change across a number of different themes. They don't perfectly match up, but if you read through their prospectuses, read through their marketing materials, there's a lot of commonality in what they're selling, what they're pitching to the marketplace. With that being said, ARK currently holds 44 companies. GTEK currently holds 67 companies. They agree on 2, right? So these are not the same portfolio, and innovation really comes down to what do you believe the future is going to look like, and do you believe that by investing in companies that are better aimed at that, you're going to be able to generate alpha through those growth opportunities and play in the market. So now that I set kind of that base case, I look at these 2 portfolios, and what I did when I started researching is I started overlapping the themes I like. I looked at cybersecurity. ARK has 0 overlap with Hack, which is the largest cybersecurity ETF. It's a negative for me. I want some cybersecurity exposure. GTEK only has 5 names, 5%, but it's got some exposure there. Same thing with clean energy. ARK does not really go after clean energy, with the one big exception, of course, being Tesla, which is a 10% allocation. GTEK has more exposure to overlap to say like a PBW or an iClean, which is specific to that. So I'm looking to try to find those themes that really align to my thought process: smart infrastructure, clean energy, cybersecurity, online retail, and across the board from a diversification perspective, GTEK's getting me a little bit more of all of those. So from a standpoint of exposure strategy, I'm giving the win to GTEK, but I would argue, just as Todd pointed out, there's actually better names out there to get broad-based multi-theme exposure. So with this concept, I'm going to go with GTEK. And the last thing on that diversification, ARK currently has 55% in the top 10 names. GTEK's more like 27%. I don't mind going after it in the thematic space and really getting differentiated, but it's a tough pill to swallow, as we've seen with performance recently, right? So I think in this battle, I'm going to give it to GTEK for the diversification across themes, though if I was going to get into the weeds, I'd give you some other tickers that I like better.
Very good. Thank you, Mike. I got you down for GTEK. Now that takes us to performance. And this is going to be interesting because like we pointed out earlier, GTEK doesn't really have much of a performance history. But Mike, you're up. Give us your take.
So first and foremost, give credit where credit's due. If you look at ARK and look at their since inception track record, they're absolutely crushing it. Yeah, they're having a rough year. It's volatility, but you should know what you're buying when you buy ARK. Todd alluded to it, but they're looking at long-term innovation. They're looking for those companies that are really going to participate in those themes and in their mind are going to significantly outperform the market. You're going to get the give and take with that. You're going to have off years, on years, but when you look back over 5 years, 10 years, have you outperformed? And right now, ARK is crushing it on a long-term perspective, and you've got to give that credit. They're killing the Qs, they're killing SPY, they're basically killing anybody on that full time frame since inception. But this year has been very difficult, and you're getting a little bit of a taste of what that concentrative of a portfolio can look like in tough markets for their themes. GTEK's a little more diversified, but still concentrated. Only 67 names, not a high overlap with things like Qs, which would be probably the best comp from a broad-based composite perspective. So past performance, ARK, because GTEK doesn't have any. Future, I don't necessarily love how expensive Kathy's portfolios are right now. If you look at the landscape of the macro backdrop and say, we are probably looking into some sort of interest rate growth, rising interest rates and high growth names. It's like oil and water. It's just not going to mix very well, and that concerns me a little bit. So price sales on the 44 names in ARK right now is like 14 times last year's last 12 months. GTEK is 7. Neither of those are cheap, but one's half as expensive. And from that perspective, looking out in the future, current setup, I'm going to give the win again to GTEK, but there are a lot of options in the multi-theme space, so don't limit yourself to these two names.
Very good. So for performance, just to confirm, Mike, I got you for GTEK, correct?
Correct.
Okay, excellent.
The future, I split my performance.
Oh, it's
so
a split decision on performance.
Credit where credit is due.
Gotcha.
ARK, you can't compete. Future, current setup, I like the prospects of GTEK a little bit better.
Gotcha. Todd, you're up next in terms of performance. How do you see it?
So I got a little bit of whiplash. We were going with past performance. We got future performance. So I'm going to hone in on a word Mike said about crushing. I'm going to go with crushed. ARK has been crushed this year. This is this is what happens when an investor buys an ETF that has triple-digit returns in 1 year. You're setting yourself up for a fund to pull back. Notably, ARKK is down as we tape this in mid-November for the year. So it's running out of time to even become positive. From a performance basis, you're right, we don't have enough of a track record to be able to look at GTEK. I'm going to again use my wild card here of KOMP and be able to say that in the past year, it's doubled the return of ARKK. It has lagged it over a 3-year basis, most of that being taken place in the past. I'm going to go with, I guess, a split decision here because I don't know whether the 1 year or the 3 years is important enough for it. But again, past performance not indicative of future results. Never before more obvious than ARKK's performance in 2021. I'll go with a split decision here between, I guess, all three of these funds, even though GTEK doesn't have enough of a record to make it really worthy of looking at the past.
We've arrived at the mystery battle category. That's where our judges can pick that single factor or multiple factors that influence their decision. So, Todd, what is your mystery battle category and who wins it?
Well, Ron, I've surprised you by using a wild card here, but I'm confident I'm not going to surprise you in what my mystery battle category is. CFRA has star ratings on ETFs, well, at least those that have more than a 3-month track record. We have a 2-star rating on ARKK as it stands right now in November. That means we think it's going to underperform the broader markets on the next 9 months. We have a 5-star rating on KOMP with risk reduction being one of the areas of focus. We think relative to its broader category, it's going to perform with less risk and yet have high reward potential. So KOMP is my winner here over ARK, with GTEK not qualifying in the mystery battle category as it stands today.
Thank you, Todd. Mike, you're up next. What is your mystery battle category and who wins it?
So my mystery category this week is a little thing I like to call reverse engineering. When it comes to looking at the thematic space, I think you have to stop and say, why am I interested in themes before you even start evaluating what's available to you, right? So what themes matter to you, whether it's ideology, whether it's all alpha, you're looking for alpha generation, where do you believe that is going to occur? And narrow that down a little bit into your favorite themes. And then what's great about the ETF structure is that transparency. You can then start saying, well, okay, I get why an advisor or an investor doesn't want to go own 15, 20 ETFs, right? Like we have at ETF Action, we have 7 broad segments for the thematic space, and then we have over 45 subgroups. So then there's a theme for almost everything, right? There's metaverse, there's clean energy, there's big data, you name it, there's going to be a theme. So I get why not wanting to own 15 or 20 and go the multi-theme, right, makes a lot of sense. But take advantage of the fact that finding the more niche theme ETFs and overlaying it to the broad multi-theme space to find which ones have exposure that you're looking for, right? And I would argue that both of these, you're not going to find a lot of the most popular talked about themes. I just did a quick overlap analysis of GTEK and ARK, and a lot of the names aren't in there right now. Kathy and team at ARK clearly are really driving up for a big play on genomics, on healthcare. They're 30% healthcare right now. So if you like that theme, go ARK. If you're more on the tech side, the cloud computing, cybersecurity, digital infrastructure, go GTEK. But my mystery category stands in this idea of reverse engineer the market. Find your favorite themes and then overlay those really narrow niche areas with your qualifying multi-theme products to say, which one's giving me exposures where I believe the market's going to go. For me, it's neither one of these, quite honestly. If you look at our models that we put together, we don't hold either one of these as an anchor multi-theme. Would leave like what we do like for another day. But if I had to pick between these two, based on the current themes that we like, looking out not just the remainder of this year, but next 1 to 3, 5 years, I've got to give it to GTEK. It's just got a little bit more diversification and a little bit more allocation to some of the top themes that we're looking to invest in right now.
Very good. Thank you, Mike. And now we shift to the part of the show where our judges get the chance to give us their overall battle winner. So, Mike, give it to us.
Yeah, so in this case, it's going to be GTEK from kind of across the board, exposure strategy, and really that mystery category being the big drivers. Performance, it's going to be a crapshoot between these two. I do think that Kathy's portfolio could really run if she's right in her macro call that this interest rates are going lower for longer. High growth names could catch hot again. That doesn't align with my thinking right now. So I just have to think about it from a GTEK being the better of these two options. But leaving it at the standpoint, I think if you're ever going to introduce a wild card, Todd's right. This is a space to do it because there's a lot of good options out there, and I wouldn't limit myself to just these two. But since I got yelled at last time for bringing in a wild card, I didn't bring any this time.
Well, you're allowed to do that, and we won't yell at you, Mike. Todd, give us your overall battle winner. I think we know who it is, but just to reaffirm to us who your battle winner is.
Well, I'll just say it wasn't me, Mike, that yelled at you, although I've yelled at other people for doing it because I wasn't prepared for it. But yeah, this is a category to do so, in part because as big a queen of ARKK is within the marketplace, it's struggling, and it's worth looking for alternatives for investors to consider. So my winner is Comp, KOMP. It's cheaper than the products we're talking about. It has a better performance record on the period of time that's relevant, although I gave it a split decision. We like the way it's constructed, and we like how it's likely to perform in the future with a 5-star rating from CFRA. So that would be my winner. And kudos to the person who submitted it, who's winning not only a t-shirt, but finding out that there's alternatives besides ARKK in the marketplace.
Excellent. Well, thank you, judges, for weighing in. And according to my battle scorecard, this is a split decision between GTEK and Comp. Of course, Comp was Todd's choice for a lot of reasons. He mentioned there that CFRA Research has a 5-star rating on Comp. They think it's going to deliver better performance with lower risk. And then, of course, Mike pointing out several strong arguments in favor of GTEK. Also, I should mention, and I know Mike has to be careful with this because he's the index provider, but MVPS, which is also a multi-thematic ETF, which allow me to just bring that one to your attention. It wasn't mentioned in today's battle, but that's another one to keep on your radar. Also new like GTEK. So great job, judges. We really appreciate your timely insights and, of course, your excellent analysis.
Thanks, Ron.
Thanks, Ron. I really enjoyed it. Thanks, Todd.
A big thanks to our judges, Mike and Todd, for judging today's matchup with compelling arguments. Great work. Be sure to visit the description section below. We've got viewer resources like online classes. We've got ebooks. We've also got some free ETF guides. We also have links to each of our judges. Check them out. Both of them do excellent research, along with our program sponsor, Direction Investments. So which ETF battles would you like to see in the next episode? Post your ticker symbols in the comment section below or hit us up on our Twitter feed at ETF Guide. Give us your ticker symbols. That's your homework assignment. I'm Ron DeLegge. Thanks for watching ETF Battles. We'll see you next time.